Good morning and welcome to Stock Market Today for Friday, May 31st, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. And we'll give a special thanks today to stockcharts.com for hosting this show in the 9:15 slot every day, as well as See It Market for publishing our work each and every day. We thank you kindly. So markets rallied yesterday and closed off the worst levels of the day. REITs, technology, and healthcare outperformed while energy was the worst sector. Treasuries were mostly stronger, with the 10-year yield moving down to 2.2%. We'll note that it is below that level here this morning. The dollar was little changed against the euro and yen. Gold finished up 50 basis points. WTI crude down nearly 4%, down 3.8% after smaller than expected U.S. inventory decline. But as we get to the desk this morning, it's very much risk off. S&P futures are down 1.2% near the lows of the morning. Asian equities were mostly lower overnight. Japan fell over 1.5%. European markets are weaker as well. Treasuries are moving higher across the curve, pushing the 10-year below 2.2%. The dollar is weak on the yen cross, as you would expect in a risk-off environment. Investors tend to gravitate to the yen, while also lagging the euro. Gold is up 90 basis points, and WTI crude is down over 2% after that nearly 4% drop yesterday. So support levels are at risk this morning. There's no two ways about it. We tested and held the 200-day moving average again yesterday, but we are pushing below there this morning. So we're support as of last night was still around 27.75. Should that break, we need to start thinking about 27.20. 27.20 would be a 38.2% retracement for you Fibonacci fans of the move from the December lows to that May 1 high. 38.2% gets you down to about 27.22. A 50% retracement takes you down to about the 26.50 level. Resistance for now is near 28.50, then in the 2900 to 2950 zone. RSI, is it stuck in bearish ranges? That's the question we need to answer. Because if the RSI cannot rally back above the 50-60 mark, you need to start thinking about the momentum shift to the downside and the possible implications for the equity market. Now, Chaikin money flow is weakening. Now, a little bit of a pop yesterday out of negative territory. I would expect that to then weaken again today, depending on how the market closes. But notice it's been weakening throughout. Right, the May 1st high was not confirmed. Lower high here for Chaikin money flow, and then it's been weakening ever since. So just something to keep an eye on from an indicator standpoint for potential read or gauge, or so you can update your thoughts on the market. But right now, support levels are at risk based on the futures market this morning as I record this show. Now, your market in a minute. What am I talking about? My note to Chaikin Analytics clients today. S&P 500 held support on Thursday, but trade tensions are mounting. U.S. threatening tariffs on Mexico now, and that's really what has the futures moving lower. Risk aversion remains the message from our key relationships. On Fridays, we look at key themes and relationships to get a gauge on investor sentiment, as well as risk on, risk off type attitudes of investors, and they solidly point towards risk aversion. Low volatility leading high beta is an example of that. 10-year yield falls below 2.2% as investors seek safe havens this morning. And as I said, futures do point to a lower open today. Now, for the major indices, from a power bar perspective, now we had a decent day yesterday, except for the small caps, which continue to underperform. But the Dow, 4 bulls to 5 bears. S&P 500, 82 bullish or very bullish stocks, 96 bearish or very bearish stocks. Now the third day in a row that we've come in and seen this ratio, the power bar ratio, skewed in favor of the bears. NASDAQ outperformed yesterday, 16 bulls to 22 bears. Small caps down on the day, 336 bulls, 411 bears. Rally in bonds sent yields lower, continuing here this morning. So according to the Chaikin Power Bar, small cap stocks and large cap stocks have turned somewhat bearish. Major indexes are all skewed to the bearish side, as we've said. Our stock of the day today, remember, this is auto-generated. It's based on our power gauge rating, and it's Stifel Financial. And this is a name that has popped up on a lot of my bullish screens of late. But what I think here is you add it to a bullish watch list, just given the market environment. SF is the ticker symbol, closed at 54.99, down 25 basis points yesterday. Stifel has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong earnings performance, strong price volume activity, as well as positive expert activity. So when we take the 20 factors, 5 in each of these categories, we come out with a very bullish rating. Very bullish stock, strong trend, strong industry group. We know we're fishing in the right pond. Let's run our analysis. Stock's been bullish since January, been outperforming roughly since that time. Stock is now oversold. So an oversold stock, while the market and model are in agreement, the dynamic duo are in gear, usually looks compelling, especially with bullish Chaikin money flow. Stock is above the rising long-term trend line where it has found support over the past couple of days. But with the market under pressure here this morning, I don't think you need to get super aggressive on the long side of the portfolio. I think you want to kind of give the market some time to stabilize and then look to the names like Stifel that have been outperforming. We're going to take another look at an example of that a little bit later in the show. Look to what's been holding up. As you're building your bullish watch list, look at these stocks and the areas of the market that have been showing relative strength, because as the market stabilizes and then begins to move higher, those groups and those stocks are likely to be your leaders. Add Stifel to a bullish watch list today. Sector tracker, movement of major sectors over the last 5 days. Materials, tech, comms, and discretionary at the top of the list. Industrials, fins, real estate, and healthcare, middle of the road. Staples, energy, and Utes at the bottom. All of the major groups have been lower over the past 5 days, and I think we're seeing some counter trend moves take place as well. Would not be surprised to see utilities start to reassert themselves in outperformance, just given what we're seeing in yield. Same would go for real estate. Materials and energy, I continue to want to avoid those groups as the dollar now starts to strengthen, puts commodities under pressure, also leverage to the trade tensions. Just not 2 groups that I want to be looking at right now. Discretionary, watch discretionary here. The retail earnings, for the most part, as a whole, have been disappointing. So check out what's happening in discretionary. We're going to take a look at a unique way to look at staples and discretionary a little bit later in the show. Our industry in focus today, aerospace and defense services. Over the past 6 months, this group has outperformed the S&P 500 by nearly 12%. Its power bar ratio, which measures future potential, is very strong, with more bullish than bearish stocks. It's currently ranked number 2 of 21 subsectors, and it's moved up 2 slots over the past week. 9 bullish or very bullish stocks, 1 bearish or very bearish stock. Some of the indicative names there: Astronics, ATRO, Wesco Aircraft, WAIR, and Arconic, ARNC, all have very bullish Chaikin power gauge ratings. So as you're looking to build your list, this is an area where you want to look. Why? Here's the Aerospace and Defense ETF, XAR. Very bullish Chaikin power gauge ETF rating. Same analysis applies. Bullish rating and outperforming the market. This is the type of group that you want to look for your long ideas. Overbought, oversold indicator struggling to kind of get any kind of traction, moving back towards oversold conditions. Chaikin money flow is bullish. Fund is above the rising long-term trend line. So again, when we talk about finding the relative strength, this is a great example of that. Aerospace and defense has been holding up. Notice the market kind of topped out in early May, and look what's been doing well pretty much since that time. Seeing the intensity of its outperformance actually increase as the market weakens. And you can see here that as the market has turned lower, aerospace and defense has gone sideways. That's relative strength. That's outperformance. This is an area of the market where if you're building your bullish watch list for names that you want to potentially own when the market stabilizes, I think you want to be looking within this group. Aerospace and defense, start parsing through it for very bullish and bullish stocks which are outperforming the market. Yesterday's S&P 500 movers and shakers, gainers and losers. Keys up 11.3% following their earnings announcement. Dollar General beat and had higher comps. That sent that stock higher by over 7%. Didn't see any real newness on SBAC to send that stock higher over 4%. Total System Services and GPN, remember, these 2 companies are merging in an all-stock deal. A little bit of weakness the previous day, so catching a bit of a recovery yesterday. TSS up 4%. Global Payments, GPN, up 3.56%. Loser side of the board, Phillips Van Heusen and PVH down nearly 15%. Their print was mixed, but their guidance was weak. Investors did not like what they heard there, down nearly 15%. Perrigo down 4.5%, and Mylan down over 4%. Nothing company specific, leads me to believe there's just kind of general weakness within the generic drug space. XEC XEC down 4.5% on the day. Didn't see any real news there. Devon Energy, they sold the Canadian business. Stock down nearly 4%. Remember, oil was under pressure as well. A lot of these names are just names. I'm sorry, they sold the Canadian business, not related to oil. This was a function of selling the Canadian business. I misspoke there. Investor reaction to that. Stock down over just under 4% on the day. So let's get into it now. Key themes and relationships are what I look at on Fridays. You know, we look at things like high yield relative to treasuries. We look at, in this case, we're looking at low volatility relative to high beta, right? When high beta stocks are outperforming, as they were through much of the back half of 2018 until the market topped out. I'm sorry, the first half of 2018. Low beta or low volatility is a defensive area of the market. And we can see that it started to rally as the market started to roll over in the summer, topped out when the market bottomed and then faded, and now it started to outperform again. Low volatility outperforming high beta is a sign of risk off in the marketplace. Now the ratio is currently overbought based on the RSI, but we've broken through this downtrend line above the 200-day moving average. To the extent that low volatility continues to outperform high beta, we would expect the market to continue to struggle. This is a sign of risk aversion in the marketplace. Staples against discretionary, another way to kind of gauge investor sentiment, whether they're risk on, risk off, right? When staples are outperforming, as they did through the fall and into the end of the year, that's a sign that investors are becoming defensive or acting in a defensive manner. Now, notice since early May, staples have been outperforming discretionary. Broken through a near-term resistance level, currently closer to overbought than to oversold. We'll see if the RSI can shift up and into bullish ranges, but just notice the timing, right? Coincides with market weakness. This is the S&P 500 at the bottom here. So as the market tops out, staples outperform discretionary. As the market bottoms, discretionary begins to outperform. And now we're seeing staples starting to outperform again. We'll see if it can hold above this recent breakout level. And again, to the extent that staples are outperforming discretionary stocks, that's a sign of risk aversion in the marketplace and an expectation that investors likely think that the equity market could continue to struggle. 10-year yield targets lower support. This really has been the big story. And one of the bigger stories, in my opinion, in the markets right away from trade is everything's kind of a function of what's going on. But 10-year yield closed at 2.2% last night and is trading down around 2.15% this morning, and now kind of has eyes towards that 2.1% mark. The yield is below the declining 50-day moving average, below the declining 200-day moving average. So odds are we're going to continue to move lower here for the 10-year yield, which is, again, why I wouldn't be surprised to see groups like utilities, groups like real estate kind of stabilize and outperform the market. And now we look at the RSI for the TNX, solidly in bearish ranges, currently oversold, but look at how easily it's become oversold really since the beginning of the year, and it can't get out of bearish ranges. So that tells me that momentum to the downside is strong and that this trend is likely to continue. Keep an eye on the 10-year yield. And finally, let's take a look at the iShares Edge MSCI Minimum Volatility ETF. USMV is the ticker symbol here. It has a bullish Chaikin Power Gauge ETF rating. And as remember I said, investors are favoring lower volatility relative to the market, relative to high beta especially, right? And we can see that here. Bullish rating and recently beginning to outperform the market. Notice how as the S&P 500 has been rolling over and has actually broken below its long-term trend line. Thus far, U.S. minimum volatility, USMV, has held above it. For investors who are a little bit more risk averse but want to maintain exposure to the equity market, this is kind of a good way to do that in the current environment. It has a lower beta relative to the market. Money flow is strong. Now, tactically, it's closer to overbought than it is to oversold. But when we think about strategic portfolio positioning, I think you want to be thinking about lower volatility names until we see a stabilization in the market. So that is going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that free email. Daily stock ideas hit your inbox every trading day before the market open. Remember, those are for you to consider. We always suggest doing more research. I hope everybody has a great weekend. I will see you back here Monday.